Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us, and what a crazy move we got to see after and also before FOMC. Gold made a high of almost 1948, and right now you can see that gold is standing at 1927, 1928 right now. Gold was crazy yesterday. You can see here dollar index hits 27-week high. Stocks retreat, US yields advance, dollar strengthens on hawkish fear. Okay. You can see the overall tone of the Fed's latest meeting was not overly hawkish, but there were two surprises. Forecasts for 2024 were slightly higher than generally expected, and Fed statements implied the view that macroeconomic growth would hold up even if with rates staying higher for longer. US Central Bank held interest rates on Wednesday and projected an increase by year end, saying monetary policy is likely to be significantly tighter through 2024 than previously thought. Dollar jumps on Fed's hawkish hold. So that's all about the FOMC, and yes, there was some crazy move on the chart of DXY. You can see that DXY is right now bullish, heading towards the next resistance of 105.90. Let me change the color. Okay, it's yellow, so it's 105.90 to 106. So if the same market sentiment remains, then obviously DXY will break 105.90 and will head higher. Resistance doesn't mean that market will obviously show trend reversal. If the market sentiment is bullish, then obviously no resistance will be able to hold the market, because this market is under the influence of fundamentals. This market have the backing of the fundamentals, so obviously DXY will be showing upside. You can see that market is forming a red candle here. The red candle signifies that market will be coming for retracement. And do not confuse retracement along with trend reversal. Both are different things. If I take you to the daily chart of DXY, then you can clearly see the market is bullish. And if the same market sentiment remains, then obviously market will continue the bullish move. And if DXY comes for deeper correction, then we can expect that 104.60, 104.65 will again come for a rescue for the support of the market. Before I proceed with the chart of gold, I would like to take you to the economic calendar. You can see that today we have important news coming up on USD again, so be careful. Market will be volatile again, do not gamble. And you can see that we also have another important news coming up: Bank of England interest rate decision. This will also be very important. If they dumps their currency, then obviously it will be bullish for dollar, and after the interest rate decision we may get to see further upside on the chart of US dollar index, and there will be further pressure on the chart of gold. Okay, so though we have only one important news for US dollar, but the interest rate decision of the Bank of England will also be very important for us. Okay, now let's look at the chart of gold then. Where is gold? Yeah, there it is, 1928. So right now you can see the gold is bouncing from the support of 1924. Okay, so first of all, let me draw the Fibo here so that you can understand properly. Yeah, there it is. So yesterday, just before FOMC, we got to see a crazy up move on the chart of gold. Market took support around the previous resistance, okay, and we saw gold bouncing. When gold was going up, to be honest, I was thinking that at one point I was thinking that before news only gold is about to hit 1950, then there's a high chance that gold will break 1950, but it did not happen. Our contracts data, okay, our contracts data stayed loyal, and they were quite powerful, as a result of which gold could not break 1950 and ultimately reverse. Right now market is standing at 1928. So if the upside on gold continues, okay, if the upside on gold continues, then taking a buy position is little bit riskier, because the market sentiment, you can see that at present the market sentiment is not very bullish. So during the day, my dear friends, observe the market around 1930 to 1933 level, mostly 1933 level. Around this level, observe the market, because you can see we have FIBO 38.2% retracement level, as well as we have the 50 moving average. And then around 1935, 1936, 1935, 1936, we have another selling opportunity because of FIBO 50% retracement level. Okay, and 1935-36 is a better level, because if you look at the options data here, you can see at 1935 call, okay, we have change in open interest. Okay, so change in open interest, and that too is a good number, plus 310. It's a good number. So 1950 is still standing tall as the best resistance on the chart. Then we have 1960. So these two are strong resistance on the chart right now. And in this month, I don't think so gold will be able to break 1960 because of huge open interest. And chances of market breaking 1950 is also less right now, because we can see positive open interest change. But moreover, for day traders, you can also expect that 1935 will also act as resistance, because we can see positive number of changes. Okay, and we can also see on the chart that at 1935, 1936 level, we have FIBO 50% retracement level. So if we combine both the factors, we can expect that market will face some resistance. So in simple words, 1950, 1960 are the strongest resistance, but chances of market breaking 1950, 1960 in this month of September is very less right now, especially 1960. And today, before the news, okay, before the news, we have resistance around 1933 level. So before the US session, if market goes up and if the volatility of the market remains like this, then day traders, you can expect a selling opportunity around this area, 1933 level. And then the second selling opportunity will be around 1935, 1936 level. Right now we can see I am on the 1 hour time frame. We can simply switch to 15 minutes time frame to observe the market behavior, because if you wait for confirmation on 1 hour time frame, it may be late. Okay, so you don't want to miss the opportunity. So in that case, you can simply switch to 15 minutes time frame and just observe it. Okay, if you see that market is showing price ejection from above, market is about to reverse, you can go for a sell position. Yes, confirmation is obviously important. No level is permanent in the market, and we are traders, our capital is limited, so we need to protect our capital. We cannot gamble with our capital, isn't it? So confirmation is obviously important. If you see market reversing from the level, you can look for a sell position. How much you can expect? It depends on the volatility, but yes, 40 pips, 30-40 pips is decent enough. On the other hand, if market drops, okay, if market drops from the current level here, okay, then try to avoid any sell position below this level. Try to avoid any sell position below this level, because we have the 200 moving average around 1922, and then we have the next support around 1918 to 1919. Okay, so if market drops and if the volatility of the market is not very high before the news, okay, before the news, if you see the market is going down with normal candles, then 1922 may act as support. Okay, so if you take a sell at 1923, and if market gets support at 1922, you'll be trapped, isn't it? So better avoid and wait for market to respond around 1922. The next support is around 1918 to 1919 because of FIBO 61.8% retracement level. Yesterday we saw market beautifully bouncing from our FIBO 50% level in this market condition. So definitely we can expect that our next FIBO level of 61.8% will also do the job. If market bounces from FIBO 61.8% retracement level, obviously we can expect around 40-50 pips. So let's wait and watch. So before the US session, before the news, okay, if the volatility of the market remains like this, so we can expect a good trade around 1933, 1935, 36. If market reverses, we can go for a sell. On the other hand, if market drops, instead of taking a sell, okay, we can look for a buy around 1918 to 1919 level because of FIBO 61.8% retracement level. And if you see the market taking support around 1922, there also you can look for a buy position. But yes, it depends, so be careful. Okay, if you already have any ongoing buy or sell position, you can be on the trade and wait for the market to take a proper direction. After the big fall yesterday, we can see the market is trying to recover, but right now we don't have any clear direction whether the recovery will continue or not. Okay, so let's wait and watch. The weekly closing of the market will be very, very important this time. And you can also see that we also have immediate resistance from the FIBO 23.6% here. Okay, and which I did not talk about. Okay, you must be wondering why. See, when the market is very volatile, okay, then FIBO 23.6 is little bit riskier. Right now, I cannot give you the assurance that it will work, because FIBO 23.6 is the weakest level among the 5 levels. Okay, so it is better to avoid in this market situation. If the market is slow, if the market is dull, then FIBO 23.6% does the job. But when the market is volatile, market is under the influence of a news, then it is always better to avoid FIBO 23.6. Not only in gold right now, in any market of the world. And after news, if market takes a particular trend, try to follow the trend of the market, because whatever we have in front of us right now, those are not very strong levels. The strong levels are far away from the current market price. The strong support of 1900 is far away. The strong resistance of 1960 is far away. So whatever levels we have right now, though they are not that strong that they can stop the fundamental of the market. Okay, so as a result, try to follow the trend of the market after news. Do not look for reversals, because you may get trapped. Be flexible, my dear friends. A trader needs to be very, very flexible. And today, my dear friends, I have something to show. The most common question that I get from all of you is that, which is the best broker, which broker you recommend? Okay, and today I have an answer. Okay, because I never give you a proper answer. I always tell you can go for XS, you can go for IC market, etc, etc. Okay, but today I have yes, I have a broker for you. So if you're looking for a good broker, nice broker, then yes, you can go for GTC. Okay, GTC is a regulated broker. You can see that I have also shared 5 tips for selecting a Forex broker, and GTC, okay, checks all the points here. Okay, you can see it's the best STP broker in UAE, and you won't believe, my dear friends, at the time of news, we always face the problem of slippage. Our stop loss do not work. In GTC, you won't face the problem of slippage. Especially Indians are in dire need of a very good broker, reliable broker, and GTC is the solution for you. If you're really looking for a good broker, you can go for it. And the best part is that, yes, there are multiple brokers around the world, but in case of GTC, okay, I have talked to them, and if you sign up for GTC, then I will be able to help you personally if you have any problem. Okay, because in other brokers, okay, you'll have to contact the customer care, you need to wait for their response, isn't it? But in this case, if you sign up through my link, then obviously I'll be able to help you out personally. But you don't need to wait for the customer care to respond. Your problems will be dealt with priority. Okay, and most importantly, okay, the broker is a good one. You can see up to $100,000, yes, up to $1 lakh covered per account under secured combined professional indemnity. So you don't need to worry about the broker running away with your funds. Okay, and it's most importantly, it's a regulated broker and very good broker. And yesterday I was surprised when I saw that there was no slippage. So if you're looking for a broker, you can feel free to sign up. The link will be in the description. Bye bye, take care.